Good morning, everybody. Welcome to Tuesday. Is it Tuesday? I've lost what track it is of the days of the week
You're
already.
always on holidays, mate. I mean, come on, seriously.
Oh, massive pot kettle.
Morning.
Morning, mate. Morning, Kay. How you doing?
Good morning, both of you. Good morning, everybody.
Hello,
Yeah,
my fellow friends.
Yeah, I'm absolutely knackered this morning. I just got shot of some family. We're staying over this weekend. They went about 20 minutes ago. The place looks like a tornado's ripped through it. The garden looks like a boatyard. Got paddle boards, canoes, deck chairs, oars, life jackets, all strewn around the garden drying out. So I need a holiday, mate. I might come to one of your beaches if you've got spare space.
Nice.
So on we go, and let's get straight into it then. Start with Japan this time. We had Finmin Suzuki out overnight. Nothing major of note. Saying FX is moving in line with the fundamentals. No real change to any rhetoric there. No upping of what we've heard recently. As we know, the yen settled down somewhat amid all the Fed moves and US side of the moves, but nothing really on the Japanese side that's causing any worries for him right now. Over to China, and a couple of news items out. One is we've been speaking about the property market, the developers and everything like that, and how China were putting in measures to help mortgage owners or mortgage holders who were paying money on properties that had stopped being developed due to all the issues over there. Well, now there's a bit of a worry for banks because mortgage holders are actually repaying a lot of money back early, which is obviously going to hit profitability of banks because they're not going to get their interest payments for as long as they may expect, or as much as they may expect, if obviously debts are paid back early. So that's something there to watch for in the property market. And as I say, China has been making moves to ease that ratio between people paying mortgages and people actually getting the properties they're paying for. On another sideline, it's been touted in the press that they're potentially going to offer an energy lifeline to Europe by reselling surplus LNG that they've got over there. And that could be something that European countries could take them up on to fill up storages ahead of obviously the oncoming winter. So that's just a story that was out overnight, and it would help the situation. May not necessarily help prices too much. Maybe not drop back, but at least give Europe a chance to buy at more settled rates, let's call it that, rather than much lower rates. Interesting news for the currency. We had those big moves in a lot of the dollar, and CNY, USD CNY, got a little pop above the 6.90, way up to 6.92, the 6.92. Now this is the onshore one, the one that China trades and the PBOC is in charge of, if you like. And we've been speaking about the PBOC fixes and how they can be interpreted. For the last few weeks, it's been more a case of the fixes catching up with the price moves. But this one could be significant last night because they fixed it below 6.9 at 6.8802, which may be significant because this can be, after we've had a fairly strong move, as you can see on the chart there, jump from the 6.80s up into the 6.90s. This can be a way of the PBOC signalling, okay, we've had a move, we're not going to let it stray too far. So now I think we may be at the point, and we'll need this confirmed by further fixes. If these fixes stay below 6.9%, then that's potentially going to indicate that the PBOC have put a bit of a tighter leash on some of these moves. Conversely, if tonight we get a move in the fix and it's above 6.9, then everything I've just said is likely to be rubbish. Kay, I know you've been following this one a bit more closely while I was off yesterday. You got any thoughts on the fix at the moment?
Yeah, it's one of the more defensive ones that they have done overnight, likely signaling again to the market that they wouldn't like it to weaken too quickly. So it's been fixed well below what the models were saying and it's a sign of them to tell the market don't go too fast, don't sell too much yuan, as they already been saying via other outlets prior. But if you look at the offshore one, we're still above 690. I do think that anywhere under 690 we should be finding fresh buyers. I'm going to try to add to what I have anyway. What I also think is that if they give the market a sniff of further stimulus to come, for instance, RRR cuts or so, the market could like preemptively sell a lot of yuan, possibly. So I think that's what they are trying to prevent here and now, and they will try to guide it. But for personally, I don't think much has changed so far, barring them telling the market like not so fast.
Yeah, as I say, having one fix below 6.9, I think I wouldn't call it significant right yet. It just may be an indicator, just maybe. As I say, if we get a string of them happening, then we know it's something a bit more.
I think
moving across.
It's the fifth fixing in a row that they are below the model, so they do want to send some signals to the market.
Yeah, definitely, mate, definitely. Right, moving across, where should we go now? Let's go to the US. We had Kashkari, or Cash and Carry, as he's like to be known in the chat room. He said he's happy with the way Powell managed his speech and the market reaction to that speech. So pretty much he's saying that the way Powell did it was okay, the way markets reacted was okay, in the right way. That's probably going to be a theme we're going to hear from some of the other Fed members who may.
Let me get this right: the Fed member agreeing with the Fed chairman.
Yeah, it's not surprising really. But yeah, and his agreement on the market reaction, which given what we've seen, has not been huge in terms of going anywhere to any new ground in a lot of pairs. Maybe stocks are probably the biggest mover amongst everything we've seen, looking at FX and whatnot. So yeah, we probably should expect to hear similar lines from other Fed members coming out on that. Now, we also had one of these little, let's call them potential tip-offs from the White House, who have said overnight that they may be expecting jobs to cool off. Now, obviously, this is coming in NFP week. And the market is taking that as a bit of a front run comment there, the way we got that when they were touting that inflation was going to potentially not be as low as some might expect. And indeed, we saw inflation numbers rising. I think it was opposite. They said inflation is going to carry on going, and then we got the higher CPI numbers. That was a couple of months ago. So again, the market may be looking at that and thinking, okay, we need to get the TIPEX out for some of those expectations for the NFP on Friday. Now, it doesn't mean they're going to be 100% right, but if NFP does come in soft or even down this Friday, then where everyone's going to go, okay, they were right and they tipped us off. So don't bet the farm on that, but have it at the back of your mind that that's what a lot of the market could be leaning. The way the market could be leaning going into Friday's NFP. Moving over to Europe, ECB's Lane was out yesterday saying that September will be the start of a new policy phase where they make decisions meeting by meeting, which I thought they did anyway. But nevertheless, he wants to spin that in a different manner. What he also said, and this is coming from his perspective, is that smaller hikes are less likely to bring adverse effects, and also that smaller hikes I've forgotten what he said now.
He was almost right. He should have said smaller hikes are less likely to bring effects. The end.
Yeah.
But, without the adverse. But yeah. Sorry, what else did he say? What else?
He said smaller hikes were easier to correct course on, i.e. they could change their mind and change rates around much easier if they were smaller hikes. So from his perspective, not very hawkish in terms of thinking we're getting big hikes from him. much as that's the way he is. He's more on the dovish side, is Mr. Lane. But all this waffle about the start of a new policy phase, meeting by meeting, we'll see what the Guard spins that as when we get to the ECB next week, I believe. So that to keep an eye on. On the energy front, there was a couple of bits and pieces. Pretty much Europe are seemingly ahead of filling up their storage for the winter. There was some discussion, are they going to get enough in time? Would the Gazprom, Nord Stream haltings affect that adversely? It doesn't seem to be. We've got some countries around about up at 85, 90% of storage capacity and looking ahead of target. In Germany, they've still got issues with the Rhine water levels and being able to transport things like coal up to the power plants. Previously, we heard that they were sort of commandeering public transport rail lines to put trains on to do that. There's still issues there. And we've also got a bit of a bum fight between France and Gazprom, who are going to cut back gas deliveries further to France's energy company because of some contract dispute, apparently, is what's being touted. We have no further details. They are currently providing 1.5, I think, whatever it is, terawatt hours to this energy company. That was versus 121 through 2021, which was roughly 20% of supply to this energy company. That's going to be cut off in the next day or two. That also comes alongside this maintenance period that we've got for 3 days. So whether that's timed to do with that as well, I don't know, but there's some in the market, or particularly France, is shouting and screaming this is part of an energy war, that and part of all the problems going on in Russia. So something to keep an eye on there. Going over to the UK and energy news, and one of the potential prime ministers, Liz Truss, wants to give more licenses to North Sea oil drilling to get more supplies into the UK. And strangely, her and Rees-Mogg held some, or will be holding some, meetings with energy firms. Now, why this is a little bit strange is because, for one, she might be doing it as part of her potentially becoming prime minister, but also she's not the energy minister and she's not the minister for this type of thing. So there's some question of, is she overstepping her remit in this and having these conversations about securing energy supplies moving forward. As I say, this could all be part of just the leadership battle going on. She's also getting some grief over cutting VAT in the UK. That one of her policies that she wants to bring in play to help with the cost of living crisis is to cut VAT by quite some margin. Has been touted around down to maybe 10% in some cases. We're running way up in the 20s for 20% for VAT. So she wants to cut some of that down to potentially 10, and she's getting a lot of grief from that. Some of it comes from Sunak, obviously her opposition in the leadership race, who's going to pick holes in it and declare flaws in it. But that's what she's setting her stall out for. Reminder, this Friday is the start of the voting for the leadership of the Conservative Party, of which we should get the result on Monday, if they can keep that secret quiet over the weekend. As far as I can see, that is what I've got on the headlines. I wasn't in for most of the afternoon yesterday, so if Kane still have got anything to add to those, please feel free to chuck them in now.
Personally, not to add, I just want to point out that I think it's important what we're seeing in the energy market. So the EU, like you mentioned, they're planning intervention, an emergency intervention. The Germans are telling us that their storage is filling up faster than expected, and we're seeing forwards of futures, actually energy futures, coming down quite a lot. Obviously, they are a lot higher than they were, a few months ago. But I think this is something that eventually is unsustainable. The levels we're seeing in energy and futures is just unsustainable. There will be some kind of and I don't want to say solution, but some kind of way that it can be it can moderate a little bit. Obviously, I don't think we're ever going to go back to the energy prices we had prior to 2022, but I think this is important. I think we are going to see energy levels going down and staying down. So I think as a result, currencies like the euros, which have taken a beating due to this issue, and others as well, are probably going to do okay. So that's, for me, that's the main thing from the last 24 hours. I don't see anything else major happening.
Yeah, and that could also be something that would be supportive of the euro if it's small speed humps, if you like. If Europe manages to fill up all their supplies, get through winter without any problems, it doesn't change the fact that they've still got to survive on energy and supplies from Russia moving forward.
Oh, yeah.
But it gets over one small speed hump, like you say, prices could ease off a little bit because there was less reliance on filling up storage capacity. And that could be a little bit of a support for the euro as well. So keep that.
Well, the Germans, if they're clever, they're going to go and reopen their nuclear reactors, but they really don't want to do that for some reason. So there are solutions, but some they're not willing to take. It is what it is.
Yeah, and I agree. They're going to be short-term solutions. They're not going to fix the problems longer term. That will come with a proper solution to what's going on in Ukraine and Russia. And because even if supplies are secured from around the world, that has to come in via ship rather than pipelines. That's increased costs, and those costs, we're going to set prices for energy. They may not go up more significantly or as significant as has been, but it means they're going to settle at a higher level than historically known. So that's going to keep inflation in the pipe. Kay, you got anything to add to any of those headlines or anything you've seen?
Nothing to add. I also agree upon yesterday we saw the European energy prices coming off. China tending a lifeline could be meaningful for the euro. This being said, they will still be paying higher prices than what they were paying before the Ukraine crisis. So it's still going to hang around Europe's neck, but probably a bit less so than the past weeks. We cannot forget also that tomorrow, I think it's tomorrow, those unplanned maintenance of Nord Stream 1 is kicking off, and I was just looking at the Nord Stream data and the projections, and indeed from tomorrow the nomination in kilowatt hour drops to 0, and it's slowing down already planned today. I'll put the link on the chat for people so they can follow whatever's happening in Nord Stream. There we go. I've put the link on there. So if you want to follow how much energy is flowing through Nord Stream, that's the one that gives you the information.
Lovely. Thanks very much, mate. So jumping into prices then, and I may defer to my colleagues who were probably watching the market a bit more than I was yesterday. But euro is looking a bit bid. Euro dollar's looking a bit bid this morning. When I sat down, it was floating around just sub parity. We have pushed on. The morning session looked, or when I first sat down, coming into about 8:30 UK time, it did look like we might be getting a bit of fixed action, and that could be what we're seeing around the hours to do with month end. Are you seeing any fundamental reasons, guys, why we're seeing a lift in the euro? I've noticed some of the crosses are a little bit more steady this morning rather than pushing higher as well in some of them.
But that's
what's going on, fellas?
That's exactly it. I think there's three things going on. The reason why euro is picking up some, I wouldn't call it strength, but retracing some is the ECB hawks during Jackson Hole, the energy situation. Yesterday we also saw European gas prices coming off 20 or 25% over the day, which is pretty significant because it was trading, the Dutch gas was trading above 300. I don't know whether they express it in euros or dollars. Never mind, because we are at parity. And it dropped from 330 all the way down to 270. I haven't seen where it trades this morning, so that's already a little bit of a lift. And then this morning we have an overlay of what's happened yesterday. Really. Thanks, Gavin. They're even a bit lower this morning at 257. So, and the rest is end of month. We're having an overlay this morning of what happened yesterday morning. That is the euro crosses pulling higher, barring Aussie. Aussie is gaining quite a bit of strength, and I think that's also with dollar China finding a bit of a top in that 692 zone, helping the Aussie recover as well this morning. Aussie yen is trading quite a bit higher. For instance, Mike was asking about the Swiss data. Yeah, I think there is a lot of end of month going on, Mike. But also, yes, the Swiss data, as the KOF indicator came out this morning, sub the 90 mark, it did weigh on the Swiss franc as it came out. The Swiss weakened for about 0.5%, and it looks as if they take the 90 mark as a bit of a line in the sand. But it has been coming off over the whole of last year. So is it just an excuse to start to cover Swiss longs into month end? It could all be part of the game. And just using this as an excuse to press the button, then it came right at 8 a.m. Our time, which is 9 a.m. European time, and likely models kicking off the day and going to sell Swiss. But we need to keep an eye on it for when the month end will be over.
Yeah, and the data is something I wanted to pick up on as well this morning. We had a round of inflation numbers. You can see there from Spain, slightly off on the prior month, year on year, on the headline number there, or the main Spanish number there, 10.4 versus 10.8% prior, missing expectations of a jump to 10.9%. The Eurozone measure, HICP, also off a touch, came in at expectations, but down from 10.7 to 10.3 there. You can't really call peak inflation when it's still running over 10%, even though that's come off a tiny bit. A 4-pip move or in either one of those isn't big in this day and age, when we can see it move 8-9 whole basis points. Looking at the German numbers, we had the regional CPIs coming out ahead of the main German number later on. As you can see there, pretty much all up. Bavaria 8.4% versus 8% prior. There is a little bit of perhaps washing out there when we saw some lower prints coming in there that were fundamentally due to some cheap transport tickets on trains run across Germany that brought inflation down. There were some heavy discounts on train travel through the months of August, I think from June through August. So that could well be washing out now as we see inflation climbing again there in the regions of Germany. Certainly doesn't suggest we're at peak inflation there particularly. Into the UK, we've got the mortgage lending and Bank of England consumer credit. Mortgages holding up pretty well. Total mortgage lending coming in looking fairly robust. So no real problems in the property markets there. No one, cutting back on moving home or paying prices or getting mortgages. That flow is still going along very well. What we did see was a bit of a drop in consumer credit. Now, this number, 1.425 billion, is total consumer credit, but they do break it down into what was credit card spending. And that's important because it can give you an indication of whether folks are piling up debt on the plastic to pay for everyday bills rather than using wages and so on. So they're dipping into their credit cards for that extra money. That dropped to 700 million from 1 billion last month. So a dip in credit card use over last month. That's always a number I keep an eye on when there is cost of living pressures coming in, because you, as I say, you get to see whether consumers are having to dip into credit cards to pay for those everyday bills. So it's an indication I like to look at. If we see it creeping high and getting into big levels like over $1 billion a month, that tends to indicate that there's problems happening on the ground, more so than we know about in finances. That can obviously have then an effect on things we see in the data, like retail sales, so on and so forth. But overall, as I say, a 300 million drop in credit card spending as part of that 1.42 million total credit. So moving in the right direction and not flagging too many problems at this moment, but as always, one to keep an eye on. Just looking ahead at the rest of the data, we had the Eurozone, the final consumer confidence number and economic sentiment number. The important numbers I watch here are the consumer inflation expectations, which is what the ECB is all about, inflation expectations. That had a little bit of I call it quite a significant drop to 36.8 from 42.7, a more minor drop in firms' expectation for selling prices. That was down to 43.7, 45.3. Obviously, given Lane's comments and all the other ECB members' comments we've had out recently, the market is doing its little rate jig over, is the ECB going to go 50, 25, 75 or whatever. These sort of numbers, particularly the consumer inflation expectations, would perhaps have in the market leaning a bit more towards maybe the 50 mark rather than the high side. But obviously the ECB will do their own thing next week. They still see longer term inflation expectations still around the 2% mark. They use, one of their indicators is what's called the survey of professional forecasters. I had a quick look at that this morning. The last survey was out in July for Q3 2022 and had those inflation expectations running at 2.1% for the more medium to longer term. If those start moving well above 2%, that's the sort of thing the ECB that will get the ECB looking a bit more hawkish. So a bit of easing there might take a bit of pressure off the higher or more hawkish rate calls for the ECB. But as I say, we're going to be doing that jig in markets over every data point and all the way up to the ECB next week, much as we did with the Fed. Right, so let's go back to prices, and we were looking at euro dollar just quickly. Again, my theme from the start of the week is pretty much the same. We're not straying anywhere new. We're not going anywhere out of trend. We're keeping a fairly tight consolidation zone, 99 up into the mid to high parities. Can't get above 1.01. Still got this little zone here. We had a little break up above, couldn't hold it. Now we're holding it again this morning. We might have cracked the egg a bit here. Again, as I mentioned Monday, I'm not surprised to see the euro finding a bit more of a bid these days after everything that went on last week. That's still evident in the crosses. If we have a look at euro sterling itself moving up a bit, let's just bring it out a touch. So still, again, within well trodden pathways, but we've had a little move up above this zone. It's becoming support once again. But until we get over something like 86 and then get a push up to 87, for me, it's still stuck in the quagmire. So I'm not inclined to get involved in this just yet. One other pair I wanted to just look at briefly, and then I'll let Kay do his, or even Stel, if he wants to talk about something, come in. Dollar CAD, I wish I was at my desk yesterday keeping an eye on this, because we've hit that up near that 130.80 level again. We had a go over Powell last week, got up to sort of 60s. We had a move up pretty close, 75s, right in that line. That's one of those speed humps, as I mentioned, that show up time and time again. And we had the break, came down, had resistance, and here we are again, seeing that line again. And now we're looking all the way down south again, maybe heading back towards the bottom of this zone, see if we can hold it. But still, again, we keep moving in this zone. We can't really hold a break under it. We can't hold a break above it. Until we can do something like that, then you can just sit there and trade the ranges if that's what you like. So that was just, I thought, interesting on dollar CAD, looking at that number again, how old numbers show up. Kay, still, you want to have a look at anything in particular?
I don't have much to say today, actually. There's hasn't been that much of note, so I don't know if Kay wants to
Kay,
show us his colors.
Show us the rainbows.
My colorful schemes, right, and images. I know. It looks a bit like spaghetti charts, but it's like I know my mess, so I can read.
I know people used to have a go at me at my colourful charts, and then you decided to take it to the next level, mate.
Yeah, I mean, the first one is already going to be funny for people, but I'll zoom in on it. I'll just show people how it looks from afar. Here we go. Right then, dollar yen to start with. Okay, first of all, I think I don't know if I showed this one earlier, but I think I did yesterday, but I have to scroll back to the 4 hours. There is this flag here before, and we've been talking about this one in our room, and possible targets of dollar yen if this thing continues on the back of Powell and Kuroda. Also overnight we had this Finance Minister Suzuki seemingly scaling down a bit on interventionist talk and fears for the market, and saying that things are moving in line with fundamentals, and that he trusts the Bank of Japan to do his job. And if you will listen to Kuroda, his job is just to sit on the side and enjoy his daily sake. So the a bit closer to home, we've seen this move higher, break again above here, and we had a few tests. This morning came even a bit below this first support zone. It's all end of month. I don't think we have to read too much in the immediate moves for as long as we stay above, let's say 137.90, 138 for a starter, or the one that I'm always keen on keeping an eye on is the daily cloud, which the top of it comes in still at around 137.15. For people who have been trading yen for a long time, they know it. Japanese investors, Mrs. Watanabe and Sons, are watching this, the daily cloud, very, very closely. Comes in around 137.15. I think as long as we are above there, there's not a lot changing to dollar yen. And there's a couple of thoughts. So Kuroda completely wiped the CPI spike off the table, saying that it's miraculous we are above 2%, and that he said that they were just going to continue. It's in stark contrast with starting the Fed, but also now the ECB, and we have seen euro yen spike quite a bit over the past couple of sessions, and I think that may actually continue into ECB. So there's not a lot going for the yen today, unless we are starting to see on the back of more Chinese growth worries, unless we are starting to see commodities coming off, energy coming off. So that is going to be, to me, a big game changer for what yen could possibly do in the future. But in the nearer term, as usual, we watch the dollar 10 years, we watch that cloud, we watch a few takes in the shorter term. I'm a little long. I was longer. I bought it on the Powell, the initial Powell drop down to 136, 3060. I bought it. I added Saturday night into Monday morning, and then I've gradually scaled down. So I've got a third of what I bought initially, and I will be trying to defend this. And I'm willing to give it a go, at least down to where that cloud lies, and possible for this move higher eventually. Also keeping in mind that in September, QT starts to QT is doubling up in the US, which in itself, without really moving the yields too much, which in itself is is tightening financial conditions, and countries already having a lot of US debt on board and stuff. They might find those conditions getting a bit restrictive just by quantitative tightening. And yen, Japan being one of the biggest US debt holders, they may find the financing costs even rising, and it may have a negative effect on the yen. I'm trying to keep everything a little bit, the fundamentals and the technical picture closely knit together, but I'm still more based on my fundamental view of the yen and what Kuroda and Powell told us. This whole mix should still be negative yen, and if ECB starts to raise rates more than what the market initially was expecting, then this euro yen is going to help just the yen getting weaker. So we had the break of this triangle. I was long, sold them out, sold the last bit out yesterday ahead of this 138.80 zone. We're back in it. If this month end continues to go on like it does, even before the end of the month, we may be looking at mid 139s to high 139s, in my opinion. So that's possible. I think I will try to buy some setbacks, maybe somewhere in the middle around 138 figure if I see it, but for sure around 137, 65, 70. Just for a speculative play into ECB, where I think the market may start to think that they really can do more than just their 25 BPs. If of course ECB disappoint next week, I think the euro will get a severe slap around the ears, but that's music for next week. On the rest, Aussie yen, idem ditto. It broke this. Let me go a little closer. It broke this triangle. It also now it failed a good number of times around this 95, 65, 70 zone. It's trading well above now. It's trading 96.10. Why not have a look at the 96, 90, 97 zone before the end of the month? It does look like end of month flows are positive on the Aussie side as well. When I look at yesterday as well, we had a bit of a spike on the Aussie yen into the fixing as well. So whatever happens in these two sessions here and now, even if it goes with what we expect might happen as a fundamental tendency or chart wise, it could only be month end. So bear that in mind, that tomorrow come 4 p.m. 4:01, the world can change again. Okay, so really bear it in mind. Whatever we see today may not be true tomorrow. On the real longer term, it's just we may be in a very long, in a more long-term ascending channel here on the Aussie yen. Of course, it's much wider, but and the downside now is nearly 10% lower. But for the longer term, keep this one in mind, perhaps. Quick look on the Kiwi yen. Contrary to the Aussie yen, is struggling to go anywhere fast. We're still more or less flat-lined. The yen is doing the heavy lifting there. Kiwi is not finding too much joy lately, testifying the Aussie Kiwi, which is trading well above 112 right now. I'm leaving the Kiwi alone for now. I really don't have any view on it, to be perfectly honest. The other interesting ones that I'm keeping an eye on, I don't have a position because I want to let the end of month flows do their thing. Yesterday we broke above also into the morning fixings in Europe, and then we had a reversal of this Euro Canada. I'm more having a look at it towards a month end. If we can get somewhere around this 133/4, 131 into month end, and not a lot changes for Canada or Euro between now and then, There is much better euro data or much better euro energy pricing prices, meaning lower energy prices. I might give it a try again because I still think that ultimately this thing is looking fragile since the break here, the major break we had, and there is a chance, I reckon, to go and have a visit lower down in this one. On the euros, the idem ditto. We were watching this yesterday. It held the morning spike, the euro spike. It held below 145. Had a little look above 145, 45.50, but it held this trend line already, and it's trading lower today. There's this really good demand in the Aussie for the end of month, seemingly. It's going to be interesting to see what's happening come tomorrow afternoon. If we see another leg up here, and if we are still unable to break above, we may have a look at the prior lows again in the low 143s, probably 142.80. But keeping an eye on it and watching the game for the time being. And then a quick one on the emerging markets. Nothing to see on the dollar mix for now, up and down and in the middle, inside the downward channel still, but unable to break the 1970-80 support area. Trade sideways. I might be looking at selling a rally there as well, since Banxico came out yesterday saying that they are not done in their hike cycle yet either. On Euromex, still same thing. We failed already yesterday around the first hurdle. I was hoping that the end of month would bring us back closer to this red line in the 2030s to try and go short again. But I'm not sure whether we are even going to make it. I've sold a tiny bit this morning again, just around average around 19, what is it, 98, 90, 99, with where we are basically. But I'll keep it very, very small and see if the month-end flows can bring us closer there. If we start to break above this 38.40 zone, I'll have to give it a rethought. Really, this Euromex. I know there's more resistance waiting up here, but that starts already to be a solid move. So I'm going to keep that red line very close, monitoring very close. Dollar China back onto the 690.5. The rest of the dollars is suffering a bit, so we are back on the 690.5 today. I'm still looking to buy sub 690 and with my alert zone between 685 and 683.5. If it goes back down there, I may step out right now. But my base case is that we still will continue to push higher. It's going to be interesting tomorrow, last day of the month, these dollar CNY fixing, what the PBOC decides to do. They may keep it below 690 again, seeing that the rest of the dollars is a bit more on the defensive. And then decide what's going to happen at the start of the new month. So, but I'm keeping an eye on this. I may just wait until tomorrow and see what's happening with this baby. Gold and silver, not a lot to say today. Gold tried to break the trend line in the former sessions, but unable to do so. I think we are a bit sideways, respect to 1722. If ever it would really severely break, 1670, 80s are still possible. And I think a lot will depend on how the market will take, well, first of all, the jobs data at the end of the week, but then see how the reaction comes when QT will double as well, and the financial conditions tightening a bit. Silver, not a lot to say. Broken sub the trend line yesterday, retest around the 1885. It's capped. We're trading around 1870. I'm letting just time go by there and see what happens. As Stelios was mentioning as well, there is a possibility we see it back down to the low 18s and then reassess the situation. And with that, back over to you, Ryan.
Thank you very much, sir. Arif, I don't know if this is something Stel might be able to answer. You're going to be speaking about the trader funding today. You've left your number for a callback. Have you done that via the link, the chat function link? So you're waiting for someone to get back to you on that chat link. Stel, that's the best way to contact, isn't it? Use the online chat link.
Yeah. Well, if Arif has spoken to somebody, then one of us is going to be in touch, probably Blake, later today.
Yeah, no problem at all. And just to mention that as well, if you do want to join the Forex Analytics platform, you can do so. I'll pop the link quickly into the chat room there. You can take a look. Come via Forex Flow and grab an exclusive discount on that. That will give you an idea of that. And also the Traders Funding Program. There's a link there too for you to come and have a look at that. See some of the goodies that we offer in terms of how you can trade. Excuse me. No time limits on trading the assessment. We don't pressure you guys into making the assessment and put all that time pressure on by giving you a limited period to do that. There is no time pressure there at all. All there is an inactivity period of 30 days. If you don't do anything in 30 days, then we assume you're not doing anything and the assessment will be closed. You can check that out on the link there as well.
It's not actually, I just want to clarify, it's not us who's doing this. It's basically because the assessment is on a demo account. The 8-cap demo accounts, if they are inactive for 30 days, they get deleted automatically from their side. That's why we have this rule. Okay, so yeah. for the demo, yeah. Anyway, okay.
Yeah, thanks, mate. But if you click through the link there,
obviously, sorry, just want to clarify as well. Obviously, if you pass, the live account is a live account. There's still the same constraint. But just wanted to clarify that. Okay.
Yeah, no problem. As I say, if you did want to contact any of the team there regarding any questions to do with the funding program, if you come through, as I say, this link that I've posted up there, click the Get Started. It will take you through. You'll see a little pop-up chat emblem down in the corner somewhere. You can click on that and ask any questions you need to there. Also, remember, if you do take up the funding program, you will get free access to the Forex Analytics platform, and that time is depending on what sort of account you've gone for. Obviously, the bigger the account you go for, the longer period of time you get free in the Forex Analytics platform. So that's what I just wanted to share with you there. As for the rest of it, looking on, I've not got an awful lot to add. To say I was out for most of yesterday and over the weekend, so I haven't really got my head around trading fully as of yet. Looking at some of the data we've got coming out, a couple of speeches coming out. We get some house price index data from the US later on, which be something to keep an eye on. As I've been mentioned before, the house prices in the US is potentially the final domino in the housing market over there that could fall. Also important is the Conference Board Consumer Confidence number. That again contains inflation metrics, 1 year and 5 year inflation numbers, which the Fed will be looking at closely as well. So that's all I've got really for today. So we called an early one. I'm going to be having my head in the charts to see what gems I can pick out for trading. As always, Ryan, thank you very much for coming to the show. Yeah. Oh, hang on.
Just one thing to because I'm seeing a couple of questions here regarding the inactivity, the 30-day inactivity. Bran wrote you can always just click in and out of a trade. That's what he means. Basically, that's what I do. I have an account as well, and when I'm not, and when I think 30 days are gonna come and pass, just before that, I just click a really small trade. Get out of it, money-wise, it makes really no difference. And then you can just do that and keep your account active. Okay?
Yeah, good stuff. Good stuff. Okay. Thank you very much for that. Thanks for that, Brian. So yeah, we'll call that a day for today. Thank you everybody for coming to the Flow Show. Again, if you do have any questions about anything, please feel free to get in contact with us either via the Forex Analytics website contact form or the Forex Flow contact form, or Pigeon, Smoke Signal, Semaphore, anything you like. Thank you very much. We shall see you all bright and breezy tomorrow.
Have a good day.
Bye-bye. Thank you, guys.